740 pips in 25 minutes, 550 pips in 15 minutes. This is how we caught both of these trades live on session. Run the intro. What's good, my people? It's your boy Daniel Effects here. Welcome back to their channel. If you're new around here, please subscribe and watch the video until the end, because I'm going to be giving away some golden nuggets as to how you can actually trade the indices successfully and trade higher probability continuation setups. Now, I'm going to be giving a quick breakdown of two trades that we've taken on the past week of trading on NASDAQ as well as US30. Both these trades were taken live and called on session. Furthermore, NASDAQ wasn't actually called on session because I was at the gym for it, but same difference. Now, right here is the first setup that we actually took on US30 on Monday. So this was a lovely little breakout trade, a quick 1 to 2, played out in about 25 minutes. So very, very in and out movement. Now you can actually see that after I took profit, price proceeded to retrace and come pretty much the whole way back down. So I don't know about you, but I call that accuracy. So scaling out to the daily time frame, because that's where all the trades start. If you guys didn't see my weekly breakdown video that I posted on Sunday, you would know, or if you didn't see it, you wouldn't know that I called for US30 and NASDAQ to be bullish for the weekly candle open. So I was personally anticipating that Monday and Tuesday were going to be bullish days, the price was going to come up and at the bare minimum retest previous daily structure right here. If you haven't seen that video, here's a pop-up right here. Go ahead and watch it and you'll understand what I'm talking about. But I knew that more than likely, fundamentally, we were bullish on the indices. At the time, the dollar was weakening, we were breaking structure. So I knew there was going to be a short-term period, the price was going to be incredibly bullish. Now, I was kind of anticipating later on in the week we were going to go bearish, and as of today when I'm recording this video on Wednesday, we have now rolled over bearish. So I kind of played that to a T, but at that time obviously I didn't know it. I just knew that we had short-term bullish price action. Now this was also correlated with some other fundamentals that we're not going to get into on this video because that's reserved for mentorship and a learn and earn group gang. Now scaling into the 1H, when I woke up, granted I wasn't waking up at 11, but when I hopped on the chart it was around 11-12 and price was kind of back here accumulating around this sort of general region. Now if you know how to trade the indices, you know that you're always looking at the most relative levels. So I had a little structural point drawn across here. I then proceeded to scale into a 15-minute time frame and I noticed a super familiar pattern right here. Now if you've been on the learn and earn for a while, you know I'm always talking about this setup because it's such a high probability setup that takes place on the indices time and time again, and they're just beautiful trades to take. Now what price will do is, in a trending market, granted this is on a basis that you're in a high volume trending market, price will have a large impulsive to the upside. It will break some sort of structure down here, maybe leave an FVG, maybe leave an imbalance, it depends. We then have a small counter trend corrective back to the downside where price will retest the structure point, potentially an order block, potentially fill out an imbalance, whatever the case might be, before you have that breakout long continuation where price will swipe all of this buy side liquidity and continue to make a higher high. But again, it's just a super common setup. I've seen it time and time again in backtesting as well as the live market, and I'm just super confident whenever I see the setup. So what I saw was that setup kind of playing out. We created a key level here in the market, just simply drawn from the structural low. Price came up, impulsively broke, and we had that small staggering back to the downside. Now there are some additional confluences that go into this. There are FVGs that got filled in multiple little spots right here, as well as this little equal low, this sell side liquidity that got swept at around pre-NY. But we're not going to get into too much details because if you want to learn about that, you can go ahead and look at ICT's channel. So price came into this key level and we had an immediate reaction. Now I'm not really looking too intensively until around 12:30, just pre-NY. Now at around 12:30, I noticed we'd already come into this level, swept sell side liquidity, and it looked like we were now on our way up. Now here on a 5-minute time frame, I saw little market structure start to form in my direction. So it formed a higher high, higher low, and then broke that and continued. Now what I wanted to see was price have a strong sentiment movement in my direction before retesting structural level, which we had right here, before we printed another strong sentiment candle. I'm talking about this candle right here in case you can't tell. Notice how we have no bearish wick. It's a very strong sentiment candle that came up and broke relative structure to the upside. At this point I knew, cool, we're about to have the breakout. Typically speaking, US30 doesn't like to retrace the movement, so once we break we just tend to start flying. There was also a bit of an EMA crossover, which again I'm not going to be showing because that's reserved for mentorship as well as the learn and earn. So we had the strong sentiment candle. I knew it was time to take my entry to target this buy side liquidity up here, and I started to scale in. Price then retested previous structure, and as you can see we just immediately took off to the upside and smashed TP in about 25 minutes. Now you may be wondering, why is my stop loss the whole way down here? Well, like I said, I do just enjoy having slightly wider stop losses for psychology reasons, as well as just overall consistency. I'd always much rather have my stop loss in a place where it should never get hit unless I'm entirely incorrect about the trade. So I could have definitely have had it here. And again, if you were in the live session, you would have heard me say this. Stop loss could have been here and you could have caught a 1 to 3 almost. But again, I just prefer having a wider stop for psychology reasons. Now again, all of this analysis was done live on session, and we did enter this live on session. So Daniel, if you got the clip, run it right now, pop it up on the screen. Just straight W's in the chat. Yeah, one thing I really like about these breakout moves is they're very fast moves. They're impulsive movements. Like this was all taken live on session, and it was also called right here on Discord, in the Learn and Earn chat room. Now you can also see right here on the NASDAQ, virtually the exact same setup played out. Price had that same key level created. We had that impulsive move to the upside, left multiple FVGs down here. Price had that small counter trend corrective back down to that key level before we had the impulsive break that came up and took buy side liquidity. Exact same setup, but just at the time US30 looked slightly better. And again, I'm only going to pick one to trade. There's no point in doubling up on my risk and trading two indices that have the exact same price action, because that's pretty much just over leveraging. So I didn't end up taking the same trade when it broke out. What I did do, however, is after I took profit on US30, I then saw this other setup kind of playing out. Now the reason that I caught this is thanks to my student Hamid. So shout out to you, because he sent me a message on Instagram. He was like, yo Daniel, I'm in this position. I looked at it, I was like, yo, that's a nice position. It looks like we can catch a continuation move, and we entered. Now this trade wasn't called live on session because I was actually at the gym when this was playing out. So I just kind of entered on my phone. I didn't want to send out a trade with no analysis because that's pointless for everyone. But it's the same sort of principle. Now this little movement right here is the 230 move, which is the New York Stock Exchange Open. If you don't know what that is, Google it. But it's when price opens up and you have very big volume candles. Everyone starts trading, and typically you just get a 15-20 minute period where shit goes crazy. So I tend to kind of avoid these periods to trade. Now when Hamid sent me that message, it was around 3 o'clock, so I knew that more than likely the momentum had already exited from the market. We already depleted that volume, and typically around 3 o'clock you tend to get that continuation higher or lower depending on which direction you're going in. Now what I saw is price had been kind of rejecting this overall structural high that we left earlier. You're leaving lots of buy side liquidity, and I was, again, you need to remember, I was very fundamentally strong that the indices were going to push higher. So I knew that more than likely we weren't rejecting this area, but we were actually leaving liquidity and inducing sellers to go short. So after I saw kind of this volume kind of fizzle out, what I started to see right here was some slight sell side depletion. We're starting to get a shift in character, and even right here on this final bearish candle that we printed, it was a very weak bearish candle, a very strong rejection. So I entered on this candle rollover with my stop loss just below structure. Now again, there are some other confluences that go into this, but obviously I'm not going to reveal my entire strategy here on YouTube currently. But I went ahead and took the entry thanks to a couple of different variables with my stop loss just below structure, again targeting that same 1 to 2 for a nice consistent risk reward ratio. And you can see right here, in about 15 to 20 minutes we smashed TP. I was out of the market. Now again, I could have held this a lot further. Price did end up going a lot higher, but I have a set risk reward ratio for a reason. If you want to know why that is, let me know in the comments and I'll make a separate video about it. But that's pretty much all there is to it. Again, all these trades were taken live in session, or they were called on Discord. Even this trade was called by my student Hamid. If you're not in that, you're missing out on a lot of money. But yeah, that's it for the video. Leave a like, leave a comment, and let me know what you want to see filmed next. I'm gonna see you in the next video.